Welcome back to the Deep Dive. Today we're putting on our TalkTickers hats, really digging into a specific company's latest earnings call and their business update.
That's right. We're looking at Salmon, the land-based salmon farming company.
Exactly. They're building this, well, incredibly ambitious facility, farming Atlantic salmon, but all on land.
It's quite a concept, isn't it? They're trying to combine the benefits of using real cold seawater like ocean farms, but within a controlled land-based setup.
Right. To get that optimal environment for the fish, minus some of the ocean risks like disease or, well, bad weather.
Precisely. It's about control and fish welfare.
Okay, so our mission today is pretty straightforward.
Yeah.
Cut through all the details in their presentation and pull out the key nuggets for you.
Yeah, we want to give you the essential takeaway points, where the project stands, the hurdles they're facing, and what's next. A shortcut, really.
Let's start with that high-level picture from the call, the results snapshot. First thing, they're still building, so no revenues yet.
Correct. All hands on deck for construction. Operating costs, though, they reported those as stable compared to the last quarter.
Okay, so managing the day-to-day running costs consistently while they build.
Seems like it. And as you'd expect, investment activity is really high. It's all going into property, plant, and equipment. Building the farm.
Makes sense. What about cash and funding?
They mentioned their cash balance, but importantly, they also pointed out they have significant undrawn construction loans and credit facilities still available.
So extra liquidity beyond just the cash in the bank.
Exactly. Plus, their equity ratio looked pretty strong, 58% at the end of Q1. That was helped by a share issue they did earlier this year.
Okay, so the headline is, heavy build phase, lots of investment, but operational costs are steady and the balance sheet looks solid for now.
That's the gist of it. Construction focus, but financially positioned.
All right, let's dive deeper then into the actual construction progress at the Kavalang site. This is where the scale gets kind of wild.
It really does. 4.4 kilometers of underground tunnels just for the water system. It's huge.
4 kilometers underground.
Yep. And the seawater intake is way down 50 meters below sea level.
Why so deep?
It's intentional to avoid things you find near the surface, like sea lice or algae blooms. Helps keep the incoming water cleaner. Better for the fish from the start.
So a core design choice for fish health. And these tunnels, they're massive, right? Like infrastructure scale.
Oh yeah, think railway tunnel size. They need to move enormous amounts of water to eventually support, nearly 50,000 tons of production.
Okay, so phase 1 progressed the first pools, tunnels, harbor. How's that looking for the first fish?
They're saying it's on track for that critical milestone, releasing the first smolt, the young salmon, in Q3 this year.
Q3. That's the big target everyone's watching.
Yeah.
Did they mention hitting any major physical milestones recently?
They did. A really big one was completing the outlet waterway. This involved the final blast to break through into the fjord.
The final blast?
Yeah.
How far down was that?
70 meters below sea level. A really complex operation.
Wow. And did it go okay?
Huge success, apparently. They sounded relieved. They were able to fill the first kilometer of that tunnel system with seawater right after, which proved the whole design works.
Okay, that's a massive de-risking event then.
Yeah.
Proving the core water flow concept actually works in practice.
Absolutely fundamental. And the inlet waterway, the one bringing fresh water in, that's also done. The final breakthrough for that is planned for June or July.
So the main water arteries are basically finished. What about all the tech stuff? Pumps, pipes, controls?
Yeah, the technical infrastructure outside the pools themselves, the seaside and saltside systems, they reported that as over 80% complete.
80%. That's pretty far along.
It is. We're talking complex networks of pipes, valves, cabling. It's all moving forward well. Seems on track.
Okay, tunnels good, infrastructure good. What about the pools themselves? That's where the fish live.
Right, the pools. This is where they hit a bit of a snag. They're focused on getting the first 4 ready for Q3. For K1 and K3, the main supports are done, and the wall elements for K1 are produced.
A snag.
Yeah, it seems optimizing the production process for the concrete, especially this stuff called UHPC, ultra high-performing concrete. It just took longer than they'd planned.
UHPC. Why the special concrete? What's the benefit there?
Ah, good question. This UHPC gives the pool walls an incredibly hard, really smooth surface. Think super durable.
Okay.
Compared to using traditional coatings, which might need repairs later, meaning downtime. The surface is supposed to be better for fish health, easier to clean, and should allow higher capacity use over time, less maintenance downtime.
I see. So it's an investment in long-term efficiency and fish welfare.
Right.
but making it slowed things down.
Exactly. The production of the concrete elements caused a delay in the pool construction schedule.
So how did they fix that if they're still targeting Q3?
They had to mobilize extra resources, basically throw more people and equipment at it to speed things up and get back on schedule.
Ah, the classic solution. More resources usually means more costs, though.
It did. They acknowledged that. Short-term extra costs to accelerate the work. But critically, they said this did keep the pool work stream on schedule for that Q3 readiness target. First fish still planned for Q3.
Okay, so a challenge identified, solution implemented, timeline maintained, but budget impacted.
Yeah.
Got it. What about the harbor? That's pretty key, too.
Definitely key. Dredging is set to finish in June, and building the quay is ongoing.
Any issues there? Weather, maybe?
Bingo. They mentioned worse than usual weather over autumn, winter, and spring, which apparently limited the time the barges could operate safely to install the big armor stones protecting the harbor.
Right, bad weather hitting marine work. Did that delay the harbor completion?
It didn't delay the schedule, but it apparently ate into the financial buffer they had for that part of the project. Still, they were clear. The harbor remains on track to be ready for receiving smolt in Q3.
Okay, let's recap construction then. Excavation, done. Water tunnels, almost done. Major breakthrough achieved. Harbor on track despite weather challenges hitting the buffer. Initial pools, K0 Hem K1, on track for Q3 smolt, K2, 3, 4 following. Infrastructure, well advanced.
That's a good summary. They're clearly in the final intense push, managing some tough engineering and weather issues, needing to spend a bit more in places, but laser focused on getting those first fish in during Q3.
All right, shifting from building stuff to actually farming fish. Once it's ready, what's the plan for Q3?
The plan is to start putting smolt in the water, probably September, maybe some batches into October. They're aiming for about 1 million smolt initially.
10 million to start, and then ramp up from there.
Exactly. Gradually increase the total biomass, the total weight of fish in the facility over time.
How will they use the pools?
Yeah.
Start small and expand.
Yeah, they'll begin with K0. That's the pilot pool they built a couple of years back, and the first new big pool, K1. As those fish grow, they'll transfer them to K3, then K2, then K4 as those pools finish construction.
Makes sense. Phasing it in. They also talked about an updated plan for phase 2, right? Optimizing things.
They did back in Q1. The core idea was, optimization, streamline construction for the next phases, reduce regulatory hurdles, and crucially, use the pool capacity even better to get higher production and lower operational risks.
How does the phase 1 work help with that?
Well, the momentum they have now with the construction teams and equipment on site makes it much smoother to just roll right into phase 2A.
Phase 2A being more pools.
9 more pools, plus building out the sophisticated fish logistics system for the entire site so they keep the experienced crews working efficiently.
Fish logistics system.
Yeah.
You mentioned that sounds innovative.
It really does. Instead of like netting fish or pumping them over walls, which stresses them out, they've designed this network of underground pipes connecting the pools. They just adjust water levels between adjacent pools, and the fish are encouraged to swim gently through the pipes.
Huh. That sounds much better for the fish.
Definitely more fish-friendly. Plus, it gives them loads of flexibility for splitting batches of fish as they grow, and it cuts down the risk involved in moving fish around.
Okay, so this better logistics system plus their overall strategy, what does that do to the farm's total potential output?
This was a really key update, this whole optimized approach, including using some capacity for post-smolt production. It lets them achieve about 20% higher production potential from Kavanas than they originally thought.
20% higher. Wow, that's a big number.
It is. It bumps the total potential from 40,000 tons HOG up to roughly 48,000 tons HOG per year.
HOG being head-on gutted weight, standard measure.
Right. So they argued this optimization makes the whole Kavanas project look even better from a long-term business perspective.
Interesting. Okay, from tunnels to fish flow. Now let's talk money. How are they paying for all this, especially with that increased potential factored in?
Well, back in Q1, they locked down a pretty big financing package. NOK, $1.4 billion in total.
$1.4 billion NOK. How was that put together?
It was a mix. A new construction loan, $400 million NOK, specifically for Phase 2A. Then lease financing, $175 million NOK for the operational gear needed in Phase 2A.
Okay, funding for the next build stage and equipment. What about cash flow once the fish are actually swimming and eating?
Good point. They secured an overdraft facility. Once they start operations in Q3, this lets them borrow against the value of their growing fish, the biomass up to 60% of its value, and also against receivables.
So working capital cover for things like fish feed, which gets expensive fast.
Exactly. Crucial for that ramp-up phase.
And wasn't there something about selling the harbor?
Yes. They're selling the harbor property itself to a company called Asset Biopartners for 400 million NOK. That deal should close soon once the harbor is formally separated legally.
And then they lease it back.
Right, an 80-year leaseback agreement. It's a way to finance that specific asset.
Yeah.
Part of the proceeds, 200 million NOK, will go to pay down some of the existing bank debt tied to the initial construction.
Okay, so it reshuffles the debt a bit. After that repayment, what did they say the total bank loan amount was?
This was the number that jumped out. After that harbor deal adjustment, they reported the total bank loan figure would be 1.1 trillion NOK.
1.1 trillion. Are we sure about that? That sounds astronomical. Would that be a typo in their materials? Billion, maybe?
It does seem exceptionally high, I agree. It's possible it was a typo in the source presentation we reviewed, but we have to report the number as presented. It was stated as 1.1 trillion NOK. Definitely a point that warrants clarification if you were digging really deep.
Okay, acknowledging that potentially. Very large number. Moving on within that 1.4 billion package, they also raised equity, didn't they?
Yes, back in February. A 600 million NOK equity raise, and importantly, it was heavily supported by their big industrial shareholders, Geronimo Martins, Highliner Foods, folks like that.
So the full 1.4 billion package was loans, leases, the harbor deal structure, and that equity injection.
Got it. So looking at the Q1 results specifically. Well, like we said, no revenues yet. Still building. Operating costs were stable. Around 13 million NOK for the quarter, excluding depreciation. They expect Q2 costs to be similar before things pick up in Q3 with operations.
And financing costs, all that borrowing.
The costs directly tied to funding the construction, they capitalize those, meaning they add them to the asset value on the balance sheet during the build phase, not hit the income statement yet. They did have some financial income from cash deposits too.
Right, so the balance sheet grows as the facility gets built.
Exactly. Property, plant, and equipment is the big asset. Cash end of Q1 was 179 million NOK. Plus, they mentioned other current assets like VAT settlements coming back that they see as liquid. And remember, that cash figure was before tapping into the 440 million NOK construction loan and 20 million NOK credit lines available then.
So considerable funding headroom still available at that point. Equity ratio was solid.
Yeah, 58% end of Q1, reflecting that equity raise. Total borrowings reported at 831 million NOK at quarter end.
And the cash flow story for Q1, where did the money move?
Operations cash flow was pretty stable, as you'd guess. Big outflow was investing 447 million NOK spent, mostly on construction. Big inflow was financing 585 million NOK coming in, mainly from that equity issue.
Okay, so the numbers show a company deep in construction, funded by a mix of debt and significant equity. But then came the big news about the budget in this latest call.
Yes, this was really the headline item. They had to announce that their main contractor told them the final construction costs are going to be higher than previously budgeted.
Uh-oh. How much higher overall?
The total budget for the entire Kavalang's build-out is now estimated to be 500 million NOK higher.
500 million NOK increase. Is that all needed right now?
No, that's the crucial part. 400 million of that relates to the work that's currently underway, steps 1 and 2A. The other 100 million relates to a later stage, step 2B, which isn't started or funded yet.
Okay, so an immediate need for 400 million NOK extra to finish the current phases. What's driving the increase? Mostly that concrete issue.
They said the majority relates to concrete work, yeah. Some one-off design changes, revised cost calculations for building the pools, affecting steps 1, 2A, and also that future step 2B. They also mentioned 80 million of the 400 million needed now is for step 4 infrastructure prep work for future expansion.
And the bottom line impact. Cost per kilo.
It bumps the estimated capex per kilo for the total build-out up from 105 NOK per kilo to 115 NOK per kilo.
A 10% jump, roughly.
Yeah.
Okay, so how do they address needing that 400 million NOK, like right now?
This was the immediate big action. The board approved a directed equity issue for exactly 400 million NOK, priced at yesterday's close, effective today, June 3rd.
Directed issue selling shares straight to specific investors, not the open market.
Correct. And who bought those shares is really significant here.
Okay.
The two largest shareholders, Geronimo Martins and Highliner Foods, they stepped up and subscribed for almost all of it. About 370 million NOK between them. Two other existing shareholders, Restora and Learn Capital Management, took the remaining 30 million or so.
Wow. So the biggest industrial partners basically covered the entire immediate funding gap from the cost overrun instantly.
Pretty much, yes. And the company really stressed how vital this was. It solves the immediate funding need, keeps the construction momentum going full speed towards Q3, and they felt the terms were supportive given the market.
That level of support from major strategic players feels significant. Remind us who they are again.
Jerónimo Martins is a huge Portuguese international group food distribution retail. Massive company, been a major shareholder since 2022.
Okay, and Highliner.
Highliner Foods is a big North American seafood processor and supplier. They invested last year. Salmon specifically mentioned they're working with Highliner on potential distribution into North America once they start harvesting.
Right, so these aren't just financial players. They have a strategic interest in seeing this succeed.
Exactly. The company made that point very clearly. Having these industrial backers step up immediately like this was presented as a major vote of confidence despite the bad news on costs.
Was that the end of the financing discussion, just plugging this immediate gap?
Not quite. They also signaled they're looking ahead and contemplating further financing down the road, potentially a Series B equity issue.
For what specifically?
Working capital.
Yeah.
For the production ramp-up phase, basically funding the cost of feed and operations as they build up that initial biomass of fish in the tanks. They've apparently asked banks to start looking at options for that.
Okay, so let's try and tie this all together. We have massive construction, complex engineering, hitting milestones but facing delays and cost increases, an updated plan for higher output, complex financing, and now this immediate equity injection from key partners to cover the overrun. What's the big picture takeaway for you?
Well, the core insight for me is you're seeing a project right at the cusp, moving from intense, complex construction towards actually being an operational farm. They're hitting critical milestones. They've even improved the long-term plan. But, it's a huge industrial project and it's hitting real world bumps, weather, construction specifics, and significant cost increase.
And the key takeaway might be how they handled that bump.
I think so. That immediate, decisive funding fix for the $400 million NOK, backed almost entirely by the major industrial shareholders at market price. That's a powerful signal. It shows they can react fast to keep things moving, and maybe more importantly, it shows deep commitment from their strategic partners, even when faced with negative news.
It really highlights that balance, doesn't it?
Yeah.
The huge engineering dreams, those tunnels, the special pools meeting the biological goals for the fish, all while constantly juggling the money side, securing funding, managing overruns, relying on those big backers.
Absolutely. And that ability to adapt, whether it's throwing extra resources at a delay or securing emergency funding seemingly overnight, that feels crucial for navigating these massive projects in a relatively new space, like large-scale land-based fish farming.
Okay, let's step sideways for a minute. Put on our purely speculative hats, and let me just say, with flashing lights, this is not financial advice. Purely a thought experiment based only on the information in this call we've discussed. What's a wild yet plausible trade idea you could construct just from these details?
All right, purely hypothetical analyst hat on, grounded only in what we heard.
Go for it. Outrageous, but plausible, based on the cost hike and funding fix.
Okay, here it is. CapEx is up $500 million total, $400 million needed right now for ongoing work. That's the bad news. But the company immediately secured that $400 million through a directed issue, mostly bought by the two biggest industrial shareholders, reaffirming their support. So the outrageous but plausible trade, maybe a near-term long position, betting the market focuses more on the elimination of the immediate funding risk and the strength of that industrial backing rather than the higher overall CapEx number, especially since the funding gap was plugged instantly at yesterday's price.
So the bet is the market sees the guaranteed funding and partner commitment as more important right now than the higher cost per kilo.
Potentially. The hypothesis is the market might see this as, okay, the key risk running out of cash before Q3 is gone, and the big guys are still all in. Let's focus on them hitting that Q3 smolt target. The wild part is assuming the market shrugs off higher costs and dilution so easily, focusing purely on execution certainty and shareholder alignment just weeks before first fish. It's a bet on momentum and confidence trumping revised long-term unit costs in the very short term.
Fascinating hypothesis. But again, let's be crystal clear. Absolutely not financial advice. Just an exercise in thinking about potential market interpretations based only on these specific call details.
Exactly. Not advice. Purely a thought experiment based on the narrative presented.
So, bringing it back to the listener. Hearing about this whole journey, blasting tunnels, battling weather, optimizing fish flow, securing huge funding, then hitting a cost wall but getting bailed out by partners, all driving towards fish in the water this fall. What stands out to you?
Yeah, it leaves you with a really interesting question to mull over, doesn't it? How much does actually getting through these last few critical construction steps and successfully putting those first smolt in the water, how much does that truly de-risk the entire venture in investors' eyes? Especially compared to the reality of that higher capital cost per kilo they'll now carry.
And does that strong industrial backing fundamentally change the long-term perception of viability? Or are the really big hurdles still ahead, during the actual operational ramp-up, trying to grow all those fish successfully?
Those are the key questions, I think. The transition from building to operating is where the next set of major challenges often lies.
It really shows the layers of complexity, doesn't it? Engineering, biology, finance, shareholder dynamics, all woven together.
It's a massive undertaking on multiple fronts.
Well, thank you for walking us through this deep dive into salmon's latest update. It's definitely a fascinating project to track as it gets so close to operation.
Always insightful to look closely at these calls. Lots to unpack.
We'll keep digging into interesting company updates and forces for you. Thanks for joining us, and we'll catch you on the next deep dive.